This is Ask Dojo. I'm going to go through a couple of things. I'm going to walk you through it. The first thing I want you to understand is what I wanted to do was take away feature, dyslexia, right? So there's no way that you don't know where things are. And I want you to have the comfort that if you get lost, there's a couple of things you're going to do, right? You're going to always hit the old Ask Dojo sign in the back there. It always takes you back to home. So if I go to, I'm not going to go to something I want you to see just yet, but let's say if I go to, no, I don't want to do that either. Sorry. Let's go here. So if I go to the news part of it, right, and I hit this, it always takes me back to the home page, right? So there's no way that you should ever get lost. And so therefore, when it comes to features, the first thing you're going to look at is the feature roadmap, right? So don't worry about all these things. But what I did was I separated the features per plan so you know what it was. And then if you go into it, it takes you in. And if you want to come out, it takes you back, right? And sometimes it goes back here, but that's okay. You're still at the feature map, which is important. So it'll guide you step by step. So you don't have to worry about not understanding anything either, because every single feature has tooltips, why it matters, and it also has the explanations of the data that you see. So there's no such thing as being lost when it comes down to it. So let me just go through the feature card just a little bit. So the first part is going to be the investment hub. This is where the world starts for you guys. It's always going to be the investment hub, right? The research hub, a little bit different, right? And then you're going to have your what's included in each plan, right? And each of these tabs are clickable, every single one. So you're able during the trial period to go into it. Now, I made sure that during the trial, every single feature is accessible. There's no such thing as you choose this one trial and this one. No, you got the pick of the litter. You can press play and have fun. But I'm going to give you strategy, as I promised to you guys before, of how everything kind of works. All right. So the first thing we need to talk about, let's go to the research hub. So the first thing I'm going to talk about is the consistency rating, right? This is probably the most important thing on the site is the rating system, how stocks are rated. It's formulaic, and I've been doing it for years. And I thought I was the only one with it, right? It's funny. But it turns out that I wasn't. It's just that it's never been an all in one place before. So I put it together and it's proprietary now. So what happens is this. The first part of it I want to talk about is it's like a stoplight, right? You have your green for go, red for stop, and your yellow for caution. But you also want to recognize that it's not simply, I see A's, this is time to buy. No, you have to analyze. It just means it's time to investigate, right? If you see F's, oh, I got to run away. No, it just means I have to know why I see F's. So you always hear me say the why is more important than the what. Don't take things for face value. Investigate. Go 3 layers deep. This is the way you find things, because companies are always in transition, and you have to understand that point. So the whole key behind using the consistency rating, it's to say, okay, if this company is good, I want to know what the metrics are. So let's go into the metrics. So the first thing, 2 things I want you to concentrate on is the earnings beat, and understand something. What did I say about the tooltips? They're everywhere. There's no such thing as you not knowing what they're not made up or anything. But here's the deal. I'm going to ask you a question. If someone gave you their word 12 times in a row, what's the chances are you can trust their word if they deliver it every single time?
99%.
It would be very good.
Yeah, you're right. Because they're a person who holds themselves at high self-esteem, right? So let's kind of correlate that to a company. If you got a company that is beating their earnings, beating their revenues every single quarter, 12 quarters, how many years is 12 quarters? Come on,
3.
Thank you very much. All right, just 3 years. So if they're beating or meeting, and exceeding their earnings and revenue and guidance for 3 years, do you have a good company or not so good company? Right, and management's pretty decent, right? So you understand that's very important. But then when you look at it, and you'll say, okay, Companies with 12 consecutive earnings beats is Goldman Sachs. Outperformed the S&P 500 by 15 to 20% over a 5-year period. Oh, it's an aha moment. That works. So you look at your revenues. Yeah. Companies that beat or meet revenue estimates for 12 quarters in a row show 80% correlation with long-term shareholder value creation, right? And when you start to look at it, revenue consistency is stronger predictor of 5-year returns than PE ratios, with a consistent beater outperforming 18%. So if I got a company that's doing well there, but is that the only thing we can depend on? No, you can't, because you have companies that are beating on earnings and beating on revenues and go straight to the tank, right? That's why you investigate. You don't just go blindly into the fog, right? So then next thing on the agenda is free cash flow. Free cash flow is the biggest thing you have. Number one, if I'm building a business, or forget that, let's say you're buying, there's two businesses, there's a choice. Let's just pick NVIDIA and AMD since it's on the screen, right? And NVIDIA has more free cash flow, right, than AMD. Who wins in marketing?
NVIDIA.
Makes sense, right? Right. So if you think about it, free cash flow is where they pay what? Dividends, buy back shares, right? Where they can build factories, pay for research. Everything comes out of that free cash flow. So the more war chest they have in free cash flow, that's one thing. But the free cash flow rating doesn't count how much cash they have. That would be simple. Every company that's positive free cash flow, okay, cool. That's a lot of companies are positive free cash flow. But the one thing you want to count on is free cash flow growth, right? So when you look at free cash flow growth, companies with 40% annual free cash flow growth, 3 years delivered median returns of 156% versus 42% on the S&P 500. Is that valuable to know?
Yes.
Right.
Yeah.
So when you understand, and I want to pull this out so you see it in your front, like really in front of you, so you understand what this is. A lot of people devalue what they don't understand. I need you to understand so you recognize what we did here, right? So those would probably be important. Free cash flow, revenue beats, earning beats, those would probably be important, right? And it's not about the free cash flow, it's about the growth of the free cash flow. What percentage are they growing their free cash flow over the years, right? So then you look at the CAGR, all right? Compound average growth rate, right? So when you start to look at that, you go, okay, companies with a CAGR of 35% over 5 years, which is less than 3% of those companies have that, right? Less than 3%, but they deliver 45% of the market's returns. That's huge. So then that should tell you as an investor, I have to be selective. I have to know that I can't own everything. I got to be selective. I have to find companies that are in this category, right? But then when you realize just the psychotic nature of how I think, I want companies that are in the top of each category, because that's how I can secure my capital for my kids, right? So then if we go to margins tell another story. So margins are very important here. Very, very important. Number one, if you have a competitive landscape and you have a company that's able to hold a higher standard when it comes down to margins, what you then have is a company with a superior product. Because how else in a field full of competitors can they hold margin? You can't, because the cheaper product should win, if that makes any sense. So this is important, but it's not about the margins. I don't care about the margins. What I care about is the growth rate in the margins, right? Consecutively, because that tells me that something magical is happening in the company when they can keep margin, right? And they can do it over a certain amount of time, right? And continuously. Now, no one's going to get margins to go to the roof, but this is where you start to say, okay, where does it peak out? But then again, how efficient is that company to get more margin, get more of what they got out of what they have, which is important. And then last but not least is technicals. I give the least credence to technicals because I'm not a technical person, but I do pay attention to it because it's part of the engine that I built around the information, which is important. right? So I want to make sure that I'm watching that 50-day moving average, that 200-day moving average, and all the factors when it comes to RSI, all the things you see on your screen. And I rated it, right, to make sure it was rated to a certain degree to give you a score, right? So when you look at the consistency rating, it's going to give you a letter here, right? This is what it's going to accumulate to out of 110 points to get 66, right? And I'm going to pay attention to these letters because as I'm going through the site, I want to make sure that I'm actually paying attention to how I pick stocks. Talking about you, how you pick stocks, and are you chasing your tail or are you getting ahead and you have wind at your back, right? You want to make sure you understand that, all right? So that's the technicals. Now, the whole stock hub is your research hub. And so you guys know, stock analysis page, this is where you start your whole journey. Because obviously, if you put a stock in here, you want to know how it's rated, right? So when you think about it, rating comes up and you're going to see. Obviously, you'll see NVIDIA has A's in these categories. It went from an F to a C to a B, right? When it came down to technicals. Why? Because the stock is over $200 now, right? Margins are C. Why? Because it's not about the margins dipped before they went up. We need consecutive growth. It doesn't hold back on any company. So if you think about it from that standpoint, right? So now I'm just going to get a little bit to connect the dots here. Consistency is very important when it comes down to when you're picking stocks, right? So you're looking at the earnings history. You're looking at all these different things. But you also want to go, okay, that's cool. NVIDIA's consistent, but what about their competitors, right? So I just hit my competitive analysis. And see, this toolbar right here allows me, and I'm not going to give you more than what you need to see because I don't want you to get dyslexia, but the whole point behind it is the competitive tab here allows you to do a couple of things. So if you notice, as soon as you pushed in NVIDIA, their competition came up. Did you see that? So you're not looking all over the place for the competition. Also, you're not looking all over the place for the information because everything is pulled in automatically for every single one of them, right? So if you have your year-to-date performance, you have your 1-year performance, and then you have your 3-year performance. It's good to know, especially when you're looking at a company. And I'm going to be taking companies from you guys in a little bit just so you see how it all works. But then if you go here, when you're in the competitive analysis tab, you can look at the income statement, the balance sheet, the cash flow statement, the trends, right? Now, this may give some people a little like word soup, like what all these numbers mean, right? So what I did was I said, okay, fair enough. I get it. Start here. Let's go learn mode on you. So it tells you what every line item is, why it matters, and then the current value. And then you go, okay, that's cool, but what does that really mean? So then when you click on why NVIDIA's revenues are increasing, then AskiDojo pops up, and it'll give you within like a 15 to 30 seconds of why it's important, why it's increasing. And then you'll be able to ask questions, right? So it'll give you the metric overview, the trend analysis. It'll give you the key drivers, root cause, and it just tells you everything you need to know. And then at the end, if you have a question or you don't know what to ask, that's okay. Will the trend continue? Simply ask. And it'll give it to you in an 18, 16 second. But as you see, the output is robust, if that makes any sense, right? And let's just say that you don't really understand how to read all of this because this is so much information overload. I don't understand the jargon. You can then say, talk to me like I'm 10 years old, and it'll break it down for you like you're a 10-year-old.
Oh, wow.
So you don't have to worry about it. So then it comes up, bing. Yes, NVIDIA's trends will continue, right? So, and then if you're lazy like me, you can listen to the whole thing, right? You can listen to anything here, right? So then let's go back. And it keeps giving you questions. You could be in a rabbit hole with this all day, right? So that's number one. So then let's get out of learn mode for a second, guys. You got a family mode here. Family mode kicks in now whenever I hit any AskiDojo, in these areas, it's going to talk to me like I'm on a seventh grade level, right? Just so you understand, right? So now I got a question for you. What's the first thing, and anyone can answer this, what's the first thing you think of when your stocks are down 6%, 5% the morning you wake up, or you see it down pre-market? What's the first thing you're thinking?
Buy more.
No.
Why is
When
it
you're
down?
What
you're
happened?
not thinking
What
that.
happened? Something
What are the
happened.
drivers?
Your thinking have kept made you think over years. I'm talking about the average person.
Oh my
What's
the
gosh,
driver?
I'm losing money.
And you want to know why, right?
Right.
So what happens is this button here and this button here, why it's up, when it's red, let me see if I can find a stock that was down. Give me a stock that was down on, okay, let's go Micron. Let's go Netflix. So it's red when it's down. So automatically, when the stock's down, you see why it's down, right? When the stock's up, you see why it's up, and it turns green, right? So now I'm going to have you give me. So I want you guys to give me a stock that this is people outside of the dojo only, please. Give me a stock that is most common.
Google.
Royal,
Don't all speak at one time.
Royal Caribbean.
I can't hear you.
Microsoft.
Microsoft. Everybody knows
Royal
about
Caribbean. Apple.
Royal. I like Royal Caribbean because you guys are going again the same information. So what's the ticker symbol, Gil, to Royal Caribbean?
I don't remember. Could it be RCL?
We'll see. It may not come up. Let's see. If that's wrong, it won't come up. That's Royal Caribbean. Congratulations, you get the prize. Okay, so here's what happens when you hit why it's up. And I want you guys to just listen to the whole output. All right, so let me hit the button so you guys can hear it.
Primary driver, RCL surged 7.34% to $285.48 on plunging oil prices and travel sector momentum from Strait of Hormuz reopening, boosting airline and cruise stocks amid broader consumer cyclical strength. Current news and narrative, 26 ago, airline and cruise stocks soar as Taco gives way to trust in Trump alone, MarketWatch.com, highlights RCL and travel rally. 30H ago, United and Royal Caribbean lead S&P 500 as travel stocks surge on oil price plunge, Barron's.com. 28H ago, why Royal Caribbean stock popped on Friday tied to oil drop and Hormuz reopening, Fool.com. 23H ago, oil prices drop as Strait of Hormuz reopens, aiding energy-sensitive travel names like RCL, Fool.com. RCL tops TipRanks gainers list at plus 7.34% with $5.46 million volume, tipranks.com, April 18th. Geopolitical and macro factors. Strait of Hormuz reopening drives oil price drop, lowering fuel costs for cruises and airlines, Fool.com, April 17th. Consumer cyclical sector flat at plus 0.0%, but industry av 2.62%. Travel tech leads at 4.44%, 0.4%. Broader indices strong, IWM plus 2.16%, XLY plus 237%. No direct Fed or tariff news impacting travel. Analyst activity, no upgrades, downgrades, or price target changes reported in last 48 hours. Analyst consensus undefined. Next earnings 2026-0505. Sector dynamics money flowing
Mute your
to travel
phones,
tech,
please.
4.44% per sheet, BKNG 4.04%, and discretionary like DLTR plus 6.0%, GM plus 0.19%, RCL plus 4.72% relative to sector AVG, driven by company-specific oil sensitivity over pure sympathy. Top gainers, DLTR plus 6.0%, GM plus 4.19%, RCL sympathy from travel oil narrative. Actionable takeaways. Bull case, sustained oil below $70 barrel and Trump policy optimism extend travel rally into next week. Bear case, Hormuz tensions re-escalate or macro slowdown hits discretionary spending. Watch for oil futures Monday open, RCL volume above $5 million, peers like BKNG, UAL for confirmation. Bottom line, the signal stack points to oil plunge from Hormuz as core catalyst.
I gotta do one thing because
RCL's relative
guys, you gotta do me a favor.
Momentum favors upside if energy stays weak.
Make sure you're
weekend
quiet.
Geopolitics could shift narrative. RCL, iDojo Edge signal convergence, moderate bearish, conviction, FUF bullish EL signal stack flags 3 of 5 signals bearish with moderate bearish conviction. Consistency rating at C. Monitor for signal improvement before re-entry. Signal convergence table, signal layer, reading, detail, consistency rating, C 1.5, 110, 6-pillar institutional quality score. Beat odds 0%, 0 consecutive beats. Earnings execution versus expectations. Free cash flow trend, $1.2 billion TTM, negative 38% year over year. Cash generation strength, technical structure, bearish, below both MAs, death cross forming, MA 50, $292.67, negative 2.5%, MA 200, $303.20, negative 5.8%. Trend alignment versus moving averages. Dark pool short interest, 1.4% short ratio. Stable proxy short pressure estimate, 1.44 from volume price behavior. Convergence verdict. 3 of 5 signals are bearish. Price is not disconnecting from fundamentals. It's catching up to them. Dark pool and short interest analysis metric value signal. Short interest ratio, 1.4%. Stable prior period, 1.3%. Baseline comparison. Short volume. Trend stable. No significant change. Interpretation, minimal short interest, limited institutional bearish conviction. Shorts are not betting against this name. Key levels to watch. MA50 level, $292.67, currently below, resistance to reclaim. M100 level, $303.20, long-term trend broken. Recovery trigger, 52-week high, $366.50, negative 22.1% from current. Breakout confirmation above this level, 52-week low, $185.50, or 53.9% from current. Absolute floor reference. Psychology check, common instincts versus what RCL signal stack actually shows. Pattern recognition, not advice. Direction key. Bullish with signals support upside. Bearish equals signals warn of downside. Mixed signals are split. Patience may be the best move. Your instinct, what the data shows, it'll bounce back. Bearish, 3 of 5 signals are bearish. The signal stack is aligned against a quick recovery. Data suggests patience, not hope. I should buy the dip. Bearish. Dip buying works when fundamentals are intact. Cash flow signals are weak and technical structure is damaged. Wait for signal improvement. It can't go lower. Bearish. There is no floor without fundamental support. 3 bearish signals mean the price may be catching up to the data, not overshooting it. Others are holding. I should too. Bearish, dark pool, 1.4% reveals what institutions are actually doing. Follow the signal stack, not the crowd.
So reality behind it is that when you're looking at what we have is a psychology check here. I don't know if you noticed that, right? So if you're getting to a situation where, oh, what do I do when the stock is down? Or what do I do when the stock is up? It's there. The psychology check is meant to slow you down. Stop making the wrong decision. So as you noticed, a lot of times, especially in my own group, I'm always managing the expectations by giving information. I'm never telling anyone it'll be okay. It'll be fine when you think about it from that standpoint. So it's always going to be about what data do I have to lay my concerns on? If you think about what happened in the last couple of weeks, and if you watch me on social media, for you guys who pay attention, I pretty much said that you got to do some homework, know where it starts, know how it ends, and understand the underlining pin is Trump does not want to lose the White House. Wait for them to see retraction. And what did we see? Retraction, right? And guess what happened once we saw retraction? Stock went up. But guess what? When Israel said, you know what, we're not done bombing, well, I knew that was going to be short-lived because, again, he's going to have a conversation, says, if I want to win and you want my support, you got to stop. And guess what happened? Truce, 10 days, right? Then all of a sudden, we have, ceasefire 10 days. We have the rhetoric of truth. We have the Straits of Hormuz opening up. I bring that up to say, if you did not have that psychology check there, you might make the wrong decision, right? And it's all backed up by behavioral science, which this is what happens. It gives you exactly what you need in order to make a real decision. Because when you look at loss aversion and you look at, should I sell at a loss or should I do this, right? So let's look at it from a standpoint of, should I buy more? Because people are like that. They want to know these simple questions. And so base case, the current signal stack and what we're seeing in the data, here's what stands out. The case for adding Royal Caribbean right now stands mixed. Let me walk through what the signals actually show. And then it tells you Royal Caribbean just surged 7.34% to $285.48 on the Straits of Hormuz reopening. Why? Because gas prices. Makes sense, right? Which crushed oil prices and lifted travel stocks broadly. That's a real catalyst, and a geopolitical relief is genuine. But here's where it gets interesting. 3 out of 5 signals in the convergence stack are bearish, which C for consistency rating, 71.1 to 110. What's working against buying more, the technical structure is damaged. Royal Caribbean is trading below both its 50-day moving average of $292.67 and its 200-day moving average of 303.20, which is a death cross is forming. For those who don't know, a death cross is not so good. It goes the other way, right? So it gives you the right information, which is important for you to be able to make a decision, right? And if I say, okay, should I buy more? That's the case. So Gil, since you put the stock in there, what's a question you want me to ask?
Well, it goes up and down. So just what's it going to do? Is it going to go back up? Is it going to go down some more?
Okay. Is it going to go down? Let's see. Let's do that. Exactly what you said. I'm not going to doctor it. I just want to see what it says.
Okay.
And then it tells you, no one can predict stock prices with certainty. Let's see, way back in here. Certainty, but Royal Caribbean current signal points to meaningful downside risk in the near term. Here's why the data suggests potential further declines. And then kind of tells you the thesis, right? But again, your job, and you know what? Let me let it read so people can hear how it works. Your job is to always investigate, right? Never take things for face value. Because if you're then doing that, you're giving power outside of your knowledge base. You really need to learn. Every time you're asking, you need to really learn what's there.
No one can predict stock prices with certainty, but RCL's current signals point to meaningful downside risk in the near term. Here's why the data suggests potential for further declines. RCL dropped 5.1 negative 5.115% recently to around $267.78 amid analyst cuts. Stifel trimmed its price target to $400 from $420. UBS cut to $321 from $350 and slashed 2026 yield growth forecasts to 1.5% from 3% due to softening European demand and geopolitical tensions. That's not isolated noise. Multiple firms are citing higher fuel costs, a big cruise expense, weaker consumer discretionary spending from inflation, and Europe booking softness as headwinds. Technicals reinforce the bearish tilt. The stock is below key support levels like $328.85 and $309.51 with a sell signal from the pivot top on July 23rd, 2025, and MACD showing -4.57, neutral but pressured. Short-term forecasts see a potential negative 14.69% drop over 3 months to $213 something range with 90% probability. RSI at 51.31 is neutral, but Williamson R at -50.61 signals oversold conditions that could extend if catalysts worsen. Fundamentals add caution. Q4 2025 free cash flow plunged to negative $3.19 billion, down 385% quarter over quarter. Debt is up 6% year over year to $18.16 billion, 120% of equity. And insiders sold $0.58 billion with zero buys in the last year.
Do you think that's helpful to hear or to know? And then if you have questions about what you heard, you can actually take this, copy it, put it in any part of it that you don't understand and put it in here, and it'll tell you exactly the breakdown. It's a little break this down to baby food for me. Because I don't really understand. Make sure you get it. And if you understand what that is, it's powerful to you. Because now you don't have to ask the opinion of someone who doesn't know, who acts like they know on social media when you can get the information. And what I did is I made sure that I synthesized the information to the point where it passes through 6 or 7 gates before it actually gets to here, right? So will it hallucinate? Maybe 1 or 2%, maybe. I haven't seen it recently, right? But what I made sure it did was the numbers was verifiable, and it just kind of made sense from here. All right, so let's go to the technical button. So if you notice, it gives you the setup. Its risk is on right now. It tells you the bias is. You know what? Let's not do that one. Somebody else give me a stop.
SanDisk.
Based on the analytics, I predict this will probably be the most widely hit buttons on the site.
Why it's moving. SNDK traded up 0.17% today to $920.99 from yesterday's close of $909.47. Dollars reflecting modest continuation of its explosive multi-month rally amid elevated volume at 1.39 times the 20-day average. This slight gain occurred on stronger than average participation, suggesting sustained buyer interest despite the stock's parabolic run from the 10-day low of $687.68 to a high of $65, well above the 50 DMA at $679.48 and massively distant from the 200 DMA of $304.56. The RSI 14 at 67.66 indicates building momentum without immediate overbought conditions, supporting a price action driven by breakout follow-through rather than exhaustion. News headlines like Elbum SA buys shares of 8,731 SanDisk Corporation. And are you looking for a top momentum pick? Why SanDisk Corporation SNDK is a great choice. From April 17 to 18, reinforce this, highlighting institutional accumulation and momentum recognition in the context of AI infrastructure demand and comparisons to peers like Micron. Volume expansion on the minor uptick points to absorption of supply at current levels, with no nearby supply or demand zones per zone bias, neutral, allowing price to drift higher on low resistance positioning. Dark pool and block trades. Recent dark pool activity for SNDK shows clear institutional accumulation, with multiple large prints executing above the current $920.99 price level. Notable prints include a 45,200 share block at $925.50, dark pool plus 0.5% above spot, a 62,000 share trade at $928.2 off exchange plus 0.777% premium, and a massive 108,400 share print at $932.75, dark pool sweep plus 1.28% above. These buys represent accumulation by smart money, avoiding lit markets to prevent telegraphing intent, comprising roughly 22% of today's total volume. Earlier in the session, a 34,700 share block sold at $908.20, negative 0.30% below, appeared as minor distribution, quickly absorbed. A standout 210,000 share dark pool print at $931 late Friday signals strong positioning for upside as institutions layer in ahead of next week's earnings on April 30th. This off-exchange volume surge, 28% of session total, implies bullish conviction, with buyers defending the $920 handle and printing premiums to secure shares in a low-float environment. Unusual options activity. Options flow lit up with bullish sweeps dominating SNDK's chain, pointing to aggressive call buying by institutions. Key trades, 5,200, May once, $950 calls swept at $1,240 premium, opening buys plus $64,000 premium, 35% above ask. 8,100, June 19th, 1,000 calls in 4-leg sweep at $8.75, $70,000 premium, bullish opening, and 12,400, April $2,930 calls traded at $15.20, block buy plus $188,000, 28% above spot IV spike. Put activity was light with only 2,800. May once $900 puts at $9.50, likely hedges, small premium $26,000. Put call ratio dropped to 2.21 from 0.45 yesterday, with call open interest surging 42% at $950 by $1,000 strikes. Gamma exposure at $950 is elevated as 0.45 delta, suggesting dealers will buy dips to hedge. These sweeps, totaling $450,000 plus in call premiums, scream bullish smart money positioning, opening new long exposure ahead of potential AI catalyst news. Institutional flow analysis. Institutions are unequivocally accumulating SNDK, synthesizing dark pool buys, 28% of volume at premiums, bullish option sweeps, call heavy, low put call, and traditional volume at 1.39 times average, supporting the $920.99 close. Price action held above the prior close with no rejection at session highs, while elevated volume confirms demand absorption classic AD line uptrend. Dark pool prints above spot, $925 and $932, paired with $950 with $1,000 call sweeps indicate layering for a push toward $965 recent high, countering any minor below spot sells. Volume delta positive, plus 18% buy imbalance, and RSI 67.66 rising, paints smart money defensive on pullbacks, but offensive on strength. News of LBP AMSA's purchase aligns with this flow, positioning SNDK as an AI momentum play versus peers. Overall, 65% of signals dark pools options volume bullish, with institutions front-running Q2 2026 earnings momentum. Liquidity zones. Major buy-side liquidity pools cluster below $900, targeting short stop losses above the $687.68 10-day low and 50 DMA, $679.48 prime for a flush to trigger covering. Sell-side liquidity sits above $965, recent high, with long stops beyond $1,000 where gamma clusters. Options max pain at $925 weekly, high gamma at $930 and $950 strikes, dealers positive gamma, pinning price up. No nearby supply demand zones, neutral bias, means price hunts downside first for stops, $900, $910 cluster, 15% short interest ST, then sweeps up to $965 plus for sell stops. Expect liquidity raid below $920 before reversal, as dark pool buys defend the zone. Pattern recognition. SNDK is forming a bullish flag on the daily chart after the explosive 1,500% plus run from $304.56 200 DMA, consolidating between $687.68, $965 with parallel channel, upper $950, $965, lower $900, $910. The flagpole from $304 to $965 projects to $1,600 plus on breakout. Shorter term, a symmetrical triangle tightens near $920 with apex imminent bullish resolution favored on volume. No bearish patterns like Head and Shoulders. Instead, higher lows since $6 and $87 confirm uptrend channel intact. RSI divergence absent, momentum oscillators aligning for continuation. Key levels to watch. $965. Recent 10-day high, key resistance break confirms flag breakout, targets 1,000. $950, $930. High gamma OI strikes from options flow, dealer hedging support, max pain $9 and $25, acts as magnet. $919.47, $910. Prior close and flag lower trendline volume shelf, dark pool defense zone. $900, buy side liquidity pool, short stops, critical hold for bulls. $965, $1,000, sell side stops of options sweep targets. $679.48, 50 DMA major support, unlikely near term. Short-term outlook, bullish bias for the next 1 to 5 days, targeting $950, $965 with $900.99 as pivot. Dark pool accumulation, premium prints, call sweeps, $950, $1,000, and volume expansion override neutral zone bias, fueling flag breakout. Watch $9, $10 hold, dip buy opportunity with RSI 6766 room to run. Earnings April 30 looms as catalyst, but momentum per Zacks Fool headlines supports 5 negative 8% upside. Risk below $900 triggers liquidity hunt to $910, test stay long above prior close. Word count 126. SNDK, iDojo Edge technical read. High bullish, 3/3 bullish. Price is sitting 35.5% above the MA50, $679.48. And a massive 202.4% above the MA200, $304.56. This is textbook bull market structure. The chart is screaming acceptance. RSI at 67.7 confirms momentum without yet flashing overbought exhaustion. But here's what matters. The fundamentals are a disaster. FY 2025 shows negative $1.64 billion net income, negative 22.3% net margin, and negative $120 million free cash flow. Yet the tape doesn't care. That's not a red flag. That's the chart telling you institutional money is pricing in a turnaround the earnings haven't proven yet. The disconnect exists, but price leads. The chart is betting on Q2 2026's $915 million net income and $1.42 billion free cash flow to sustain. Watch whether that conviction holds at the next earnings print. Signal convergence table signal value chart. Read technicians take consistency rating 4 and 10. Weak fundamentals, but
so I'm going to stop there and I'm going to explain this. Is that good information? You know, if you're any least bit, if you're technical, you want this information. If you're fundamental, you want the other one, but you want them both. You want to be able to combine, because I combine. I want to know where I'm at, when I'm there, all this other good stuff, right? But here's the really cool part. You see how you have the yellow, the green, and if there's anything red, it'll be there as well. This is part of the signal stack. So that means when you're adding this company to your watch list, which we're going to go over next, you see the signal stack colors. And when they change in any direction connected to the technicals, it changes in your signal stack and it changes on your watch list. So your watch list becomes this big like just breathing organism, if you think about it from that standpoint. And of course, if there's things you don't understand, you can ask iDojo and it gives you the questions. So you don't know, it tells you, right? And then the questions you may have, you can go from there. So the next, let's just say that I want to add this to my watch list. I just removed it. If you can see it on the bottom of the screen, I'm just going to add it again. And then I'm going to hit my watch list, which is conveniently tucked inside the toolbar, right? So when I go to my watch list is like my maze. I love it. So it'll give me obviously Dow, S&P 500, NASDAQ, where things are trading. And I just added a mock portfolio. So it'll give us our total gains. And the good thing about it is you can actually add your portfolio, like how many shares you have, the price you own it. So this way it's in there, right? And you can mock share it as well. So here we have earnings coming out this week. So all of a sudden, if we have Tesla coming out, it tells us the date it's coming out. And then you see the beat odds tab here, right? So if I hit the beat odds tab, it's going to take me down to the potential nature of what it may be. 52% coin flip that they will beat. And it has a tooltip here to show you how it is calculated, right? Then if you go down, you're going to find that likely to raise, 54%. Then you'll see their 5-year trend. You'll see their earnings estimates, revenue estimates, their beat history, their revenue beat history and earnings as well. And then you're going to see the odds on the street in terms of price target expected move. And that's based on the options market. right? Your probability engine, it tells you what's been going on over the last year, monthly, quarterly, weekly, right? And you saw Tesla moving up a little bit, obviously. That's what's going on in the weekly. And then it gives you a prediction on the odds based on beat history, the estimated drift, institutional flow, insiders, and options. Hold on. That whether the stock could go up or down, right? And it kind of gives you that, and it, from here, from there, right? So if I go back to my watch list again, that's here. What's happening is I can put all of these in here. Whenever I put it in, if it's within 30 days, it's going to show up in my upcoming earnings. So whatever's in my list, it's going to show up here automatically, right? So then I can add my symbols here if I want to build my watch list. And this is important. You want to build your watch list. You don't want to watch the stock market every day, right? You want someone to do it for you. And this is what it does. So what happens is this. So if you look here, you'll see that you have the signal engine right next to it, right? So this is all technically bullish, right? And this is the cool part. So you see where the company's names are here? Let me do something for you. Refresh intelligence. And if you see a light little glow underneath the names. Give it a second. So now you see what happened. All the news populated. So he says early, this means it hasn't spread that much on the internet. So if I hit it, it'll tell me Sanders stuns with quarter, blah, blah, blah. If I hit the narratives, this is what the recent narratives is. It tells me the time and the date that I got the information. And then if I have any questions, it pre-populates questions and I can ask iDojo here, right? So the key is you can drill down on any stock. It does not matter, right? Now, here's the cool part. So let me move this from my toolbar. So if you're going to be able to, with your watch list, you'll get a morning brief. So it'll come to your email box. You get a weekly iDojo Edge that happens. It'll give it to you at 8 p.m. on a Sunday evening. Then you get your monthly intelligence report. It gives you all your activity. If you've been leaning towards whatever stocks you had in your portfolio, what sectors you've been looking at the most, it gives you a monthly intelligence report on everything, and it gives you what's happening in the actual portfolio as well, right? Going back. So pretty cool. I like knowing what's happening. I like to know if news is changing. And this is catalyst news. It's not like news that you're getting from Yahoo. If something's happening that's moving the stock, that's what pops up here, if that makes any sense. Any questions about it?
Yes, I have a question. Is this limited to just individual stocks, or can this also analyze ETFs?
You can put ETFs in there as well. I haven't tested it with the ETFs, but you can. All right. So
thank you.
You're very, very welcome. All right. Let me go to the next thing. So let's go into research mode. And you got to realize this is the type of information, especially in the technical analysis. Bloomberg charges $2,000 a month for it, right? I wanted to make sure I leveled the field and gave you all the information that I can give that made sense. Let's say we want to research companies. Let's go back here, right? Let's go back to the explore features. We want to show you. Yeah, let's do that. All right. So I'm going to go to the financial x-ray. You know what? For the watch list, I want to play you guys something real quick, and then I'll move on to the financial x-ray. So you get a little bit more.
Introducing the Ask iDojo Intelligent Watch List. Get live signal alerts in real time, so you never miss a shift that matters. Clear, simple signals. Red for bearish, green for bullish, yellow when the market turns mixed. All of it is seamlessly connected to our intelligent psychology check system. Your watch list connects directly to the emotional IQ center within your dashboard, helping you understand your own trading psychology, where you own the stock and where it's trading. Stay ahead with live, market-moving catalyst news, right where you need it. Instantly see multiple narratives, and if you have any questions, simply ask iDojo. Access a built-in earnings dashboard, powered by a prediction engine designed to give you forward-looking insights. Go deeper with analyst estimates and beat odds, so you don't just see the data, you understand the probability behind every move. Keep yourself up to date with our daily, weekly, and monthly intelligence built around your watch list. Daily watch list, gives you morning brief on each stock in your watch list, plus a signal flip list so you know what's changing. Every week, get your Edge report, delivered Sunday evening, with a complete play-by-play across your watch list and key catalyst updates. And every month, unlock a full intelligence report, bringing together deeper trends, patterns, and insights. Even when you're not watching the market, AskiDojo is. Get alerts directly to your email for signal flips and consistency rating changes, so you're always in control. Get Ask.
So the cool part about it is it kind of helps you throughout the day, so you don't have to check your stocks every day. Is that pretty cool?
Retail.
Let's do the financial.
Most investors don't know how to read a company's financials. With our financial X-ray, just enter a ticker and select the data you want to explore. AskiDojo instantly breaks down the story, simplifying income statements, balance sheets, and cash flow while breaking down the key details inside 10Ks and 10Qs. Go beyond the surface, see what others miss. With Risk Radar, uncover signals and risks that others might overlook. Then go deeper with blind spots, revealing hidden insights buried within the numbers. Understand exactly how the business makes money with verticals, breaking down each revenue stream clearly and simply. Explore the inner workings with business DNA, showing who the company depends on and how those relationships impact its performance. All in one place, connected, clear, and easy to understand. Still, if you need further clarification, just ask AskiDojo. So you don't just read the numbers, you understand the business.
Okay, so let's go to that really quickly. Let's go back into the Explore features. Let's go to the lead. Let's go to Financial X-ray. All right, I need another stock, people.
Navitas Semiconductor, NVTS.
Who said that?
Andrew.
It's like, I'm getting in this one. That was what is it, NVTS?
NVTS.
Okay, so what would you like to know? So let me explain first. So you're going to learn that you don't have to do anything with this, right? This is an elite feature, and I must explain this. So income balance sheet, cash flow trends, 10Q, 10K, you could see the risk, you could see what's happening behind the blind spots. And let's say a company loses a supplier, the business DNA will tell you if it affects the business. I think that's vital. It's kind of crucial, right? You want to know, everyone likes to talk about, oh, the stock's good. But even when you heard Sanders gave you all these beautiful rosy numbers, but then said, wait a minute, but the fundamentals are crap, right? That means they're pricing in, they're just running it up without pricing in that concern, which means London Bridge can come falling down. So what would you like to know? The blind spots, the mode, or would you just like to know overall trend?
The blind spots and the trends, actually.
Okay. You don't care about the numbers?
Always care about the numbers. It's had a good run, but I'm not convinced it'll be a long-term run.
All right. So the cool thing about this is as things pop up, it gives you the information, right? So hit your button. I get tired of reading all day.
The story of Navitas Semiconductor Corporation. Navitas Semiconductor designs and sells gallium nitride, GaN, and silicon carbide, SiC, power integrated circuits for next-generation power conversion in mobile chargers, laptops, data centers, solar inverters, electric vehicles, and AI hardware. Revenue comes primarily from selling these power semiconductors to OEMs in China, the US, Taiwan, and Korea, with GaN dominating mobile consumer applications and SiC targeting higher power industrial EV uses. Profits remain elusive as the company invests heavily in R&D and expansion, but the business model hinges on SiC's superior efficiency over silicon, enabling smaller, cooler chargers and power supplies, driving adoption as AI data centers and EVs demand compact, high-density power. Revenue mix skews toward mobile consumer, historically 70–80% of sales, but management is shifting toward higher margin SiC and data center GaN for better profitability as volumes scale. How they make money. Navitas generates revenue through direct sales of GaN and SiC power ICs, system controllers, and digital isolators, with no services or recurring licensing yet. Key segments include mobile consumer, fast chargers for phones, laptops, 70% of FY 2025 revenue implied by filings, data centers, EV industrial, higher power GaN SiC for AI servers and inverters, growing share, and emerging solar storage. Profits are suppressed by R&D, -40% of revenue, and SG&A for sales ramp, but gross margins hovered around 31% in FY 2024 before compressing in 2025 due to lower volume fixed costs and pricing pressure in consumer. SIC and data center GaN carry 40-50% higher margins than mobile GaN. So the shift here, fueled by AI demand, could unlock leverage, though consumer remains the cash now driver while enterprise builds backlog. What the numbers are really saying. Revenue collapsed 78% from Q1 2024's $23.2 million peak to Q4 2025's $7.3 million, signaling a severe demand trough in consumer electronics amid post-pandemic inventory digestion and weak smartphone laptop sales in China. Q2 2025 held at $14 million plus on lingering backlog conversion, but Q3 fell to $10.1 million and Q4 to $7.3 million as mobile GaN orders evaporated. Management cited channel destocking in Q3 2025 10Q and 10K, with no new design wins offsetting the pullback. FY 2025 totaled $45.9 million, down 45% year over year from FY 2024's $83.3 million. Purely organic decline as no acquisitions occurred. SIC data center showed glimmers, new AI partnerships noted in 2026 news, but consumer GaN bore the brunt. Earnings per share volatility screams noise over signal. Q2 2025's -$0.25 versus $0.9 in Q1 Q3 stemmed from a $27.5 million non-cash goodwill impairment on underperforming mobile assets per Q2 10Q, while Q4's implied deeper loss tied to restructuring charges and stock comp acceleration in the 10K. Clean. Recurring earnings per share power is around $9.09 share, Q1 Q3 levels, excluding impairments and one-offs. GAAP earnings per share of $90.57 for F 2025 masks no tax windfalls or asset sales, just operating losses amplified by $30 million plus in non-cash items. No mark-to-market derivatives or litigation noted. Swings are impairment ramp costs. Operating margins cratered to -567% in Q4 2025 from -133% in Q3 2024. Driven by revenue plunge without proportional OPEX cuts, fixed R&D SG&A stayed at $20, -$25 million quarter for SIC qualification and AI wins, eroding leverage. Q4's -$41.4 million op loss versus -$19.4 million Q3 included $15 million plus in one-time severance facility optimization, 10K disclosure, with gross margin compression from low volume mobile mix under 25% versus 31% historical. Trajectory bottomed in Q4. Q3's -192% showed slight stabilization as SIC pricing held. Cash flow confirms the bleed. Operating cash flow worsened to -$42.9 million, FY 2025 from -$58 million, FY 2024. Tracking op losses with no working capital relief inventory built for anticipated ramp, receivables stretched on weak China sales. Free cash flow at -$44.4 million reflects minimal capex, $1.5 million total, down from $6.8 million prior year as expansion.
How's that sound?
Not
Right?
good.
But these are the things you need to know, right? So in retrospect, how's the information?
Well, it's helpful. I've made money and maybe it's time to get out. I don't know.
Well, then so I don't know if you make that decision based on one blurb, right? So my mindset is I got to know everything, right? So then I also got to look at it from a standpoint of, I don't know. I mean, but I think you take whatever concerns you have and you bring up the data and you just kind of dig a hole. Does that make any sense?
Yeah, totally.
So you never make a decision based on the first thing, right? Because it's always going to be, especially if it's an emotional decision, it's the wrong one. 9 times out of 10, right? You heard them say that all the fundamentals are crap in SanDisk, but they ran SanDisk up, right? You also saw them run Oracle up, and the debt load is incredible over there, right? The market has its own rhyme and reason, but the whole thing you do behind the consistency rating and knowing and understanding these things is that if you have something fundamentally solid, then you can avoid the noise. Does that make any sense? All right, so what was the answer to this question? Is it time to get out? No, it's not time to get out yet. If you're in for the long term on AI-powered semiconductors, but the sharp 73% year-to-date rally has pushed the stock into an overvalued territory. So it pretty much tells you that, yeah, stock can come down because it's ran so much, right? But in these areas, when you start to see these IPOs coming out and all these different things happen, they're going to have margin expansion, right? And that means they're going to pay more of a higher multiple for certain some of these companies, and just the inkling that they may even go cash flow positive would send the stocks going forward. If that makes any sense, is that what you Nan? Is that you? That was Nancy, right? Does anyone have another stock they want me to look at real quick?
Salesforce.
CRM, right?
Yep.
What you want to know?
Is the stock going to go back to 350?
Oh my God, that's technical. You can ask that in the technical analysis button, right? But this over here is fundamental basis. So let's look at the trend then. How about that? All right, so let's look what we got. We got the story behind the numbers first popped up. Let's go to the concerns. Debt ballooned to 14.4 billion in fiscal 2026 from 8.4 billion. That's a big one, almost 90%, I would say. To fund Informatica and buybacks, pushing net debt to 7 billion against 7.3 billion cash. Interest coverage remains solid at operating income levels, but rising rates could pinch if AI capex surges. Total assets grew at 112.3 billion, but current ratio at 0.76 signals tight liquidity. And if you don't know what the current ratio is, it's how fast can I turn money to cash? All right. Let's see if the trend report came up. Trend analysis. Salesforce. Oh boy. All right. So what's happening right now? Revenue grew consistently in quarter 2, 2024 at quarter 3. It's kind of giving me the back history here. 24. Let me go here to, and this acceleration from single digits to low double digit quarterly gains reflects strong demand for Salesforce customers 360 platform, particularly subscription, 80 to 85% revenue historically. Why our agent tools like Agent Force are landing deals. Oh, let me see something here. I like to go to the bad stuff. See what's going on here. Momentum check. That's the trend. So let's go bigger. The bigger picture, last 3 to 5 years, revenue journey from 26.4 billion in 2022 to 41.5 billion fiscal 2026, 57% total. CAGR is only 12%, right? The shift from hyper growth 30% to steady 10% as CRM market matures. Drivers acquisition Slack 2021, added collaboration revenue, AI pivot, post 2023 stabilized post pandemic churn, profit evolution, no margin from 5% from 2022 to 18%, okay, to 2026. But here's going to be your reality. When you're asking, are these companies going to go up or are they going to maintain their trend? You really can't ask this question without qualifying the information. Do you know why stocks go up? Do you know what data formulates an uptrend? You got to get, that's what this whole platform's about. It'll teach you to do that. And it'll show you the information on why. And guess what? You can ask the question, does CRM have the fundamentals to grow at 15, 20, 30%, right? Is their cash flow going to increase or is it decreasing, right? What is CRM's free cash flow? And is it growing? Growing or decreasing, right? And you want to, but see, as you get more mature and you get these questions here, it's always going to give you questions. So you ain't going to have to worry about it. You don't have to be in a fog. But what's going to happen is when you look at these things, you should use this data to then say, you know what? I don't understand this line. Could you put, and you copy and put it here and say, could you break this down to baby food for me? Right? Let me do that and it'll do it for you. So there's no more not knowing anymore. It's a huge, huge, huge thing that I use on a daily basis, just so you know, right? So decreasing. Salesforce free cash flow is robust and growing steadily. That's good, right? So when I hear that, then I want to go, I'm not trying to give you a feature overload, but I want to show you something that makes sense. So then if that's the case, I just want to go to my investment hub, right? And I want to put CRM in there. And then I want to pull it up and I want to go to my cash flow calculator, right? Because here's the thing. Wouldn't you like to know if a company's earning enough free cash flow for that stock to be higher in the future? Is that a yes or no? Right. So then it's pretty simple. It's like a no-brainer, right? So then what happens is it shows you. So their free cash flow is growing at 15.83%. So if the stock right now is trading at 182 and it stays on track for the next 5 years, then there's a chance it can be $379. Right? There's a chance. But this is about you watching the road. This doesn't guarantee nothing. These are just based off the growth rate of 15.83% in their free cash flow. But the question is, how powerful is that information for you?
It's good.
Good? Let me tell you something about good. I did this with NVIDIA. My guys will tell you. I did it with NVIDIA when it was trading around $300 to $400. And NVIDIA's up what? What is it now? 1,300 points for us. Good? It's great. Because the value comes from understanding what free cash flow calculation is. Once you understand it, what it is, then you understand the value in the consistency here, the free cash flow growth rate. Because you know if it's growing based on a certain rate, then you can predict where the stock's going to be based on what the market is going to pay for their free cash flow over time. Does this make any sense?
Yeah.
But if you don't know that information, it's hard. You're kind of lost in the sauce, right?
Yeah.
All right. So let's go
So
back.
based on that information, I mean, the stock, the company is pretty good. It should be good, but unfortunately, it's dropped 60%.
Good is relative, right? So let's go back. Good is relative to how you're making money in it. This would cause me a little concern to look at. Why? Because if you look at their revenues, how many quarters have they been consistent on their revenues? 5 consecutive quarters. How many quarters have they consistent on 12 on the earnings? 5 consecutive quarters. Free cash flow rate recently, right? But when you think about their CAGR is 12% and their margins have increased 5% versus peers. But then I want to look at consistency, because consistency is everything. Again, I told you this is your hub. So I want to know, well, are they consistent when it comes down to revenues? You answer that. When the earnings, answer that for me.
Yeah.
Yes, is your answer? They're consistent when it comes down to their earnings? Yes or no?
No.
Was it yes or no? I want to know.
No.
Right. So then I want to look at the revenues. Are they consistently when it comes down to their revenues? No. They meet and beat. So they perform on their top line, but their bottom line, they do not perform. So that tells me what? It tells me there's noise in their earnings. Does that make any sense? It's noise there. So my job is to find out what the noise is. Yes or no?
Yeah.
Right? So there's no site like this on the planet, right? Especially when you have everything at your fingertips. The whole key is you go slow. You don't try to run up on them, right? You just go slow. Because now you start to understand what you're doing, if that makes any sense. All right, hold tight. So now, as I always tell people, the consistency rating pretty much lets you know if you're buying a good house in a bad neighborhood. You want to know if you're buying a great house in a great neighborhood. So when you start to see this, you know right away what's good versus bad in terms of consistency, right? And so when I look at it, NVIDIA's consistency rating, and I go, let's go to their earnings. So question, are they consistent, yes or no?
Definitely yes.
Okay, so that's what I need you to know. So now you know the difference. Are they consistent when it comes to the revenues, yes or no?
Yes.
So now you know what quality is, right? So the whole key to the site was to teach people what quality was, what quality wasn't, and no more what?
Noise.
Guessing. No more guessing, taking shots with your money. You hear people who invest, I'll take a flyer. No. Why are you taking a flyer? I won't take a flyer with my money. I want to know what I'm buying, when I'm buying it, what's the potential upside there. Does that make sense? So I go back to my explore features, and I keep going back to explore features, but I can do it the other way. by the way. I can just, because I know the site, but since you don't, I want you to get used to hitting this button and going back here. So let's say I go to the pro and I want to, I really want to know where I'm coming from with this stuff, right? So I want to run a research report. How powerful is it to have a research report? Give me a stock to run a research report on, guys. Give me a stock.
Rubric, RBRK.
Is this your second one?
No, this is my first one.
Okay, give it to me. What's it? Was it
RBRK?
But you know what I would first do before I run the research report in it, right? What's the first thing you think I would do?
Get an overall picture of it.
Consistency report, the consistency rating. Does that make sense?
Yes.
But now I get a chance to see it. So now we got a habit forming. We know we want to put it into the research hub. We want to see what the ratings are so we can decide whether we red light it, green light it, or we yellow light. Right? Green for go, red for stop. Mix, we gotta investigate, right? That's number one.
Do you have like tutorial videos on the platform in case we get confused about what we're supposed to be looking at?
I'm gonna be building them now. What I wanted to do in the beginning, obviously, was get the platform ready. So I'll be
And can this thing do mutual funds?
in this thing that sounds like Gil. Yes, it does mutual funds.
Yeah, it was Gil.
Yeah. And it's not a thing. It's Ask Dojo. Thank you very much. Be respectful. This thing. All right, so we got it. So then you have your research report. I'm just going to give you I'm not going to let it play. What I'm going to do is just give you the summary. So it gives you the executive summary, the company overview, the financial analysis, income trends, balance sheet, cash flow analysis, valuations, and consistency metrics, right? Then it gives you last trading day summary, trending analysis, institutional flow, key support demand zones, actionable signals, technical verdict, competitive positioning against its competition. Pretty cool. Institutional ownership and activity, blah, 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 right? Recent insider transactions, growth driver catalysts, risk assessments, Wall Street's opinions. Then it gives you the rating distribution. It gives you individual firm ratings. It gives you the bull case, the bear case, the base case. It gives you a portfolio fit. And then it gives you the 5-year calculations from the cash flow calculator based on where the stock is trading. So let me go here. Let me then go back to, I'm just going to hit the logo real quick so I can jump back, right? So what was that ticker symbol? Was RB what? BK?
RK.
Okay. So then I want to see what's happening here. Dun, 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 dun. C's and B's. No, not bad. It's investigate. That's what it says to me, right? I want to investigate, but I also want to see what's going on. So if I hit the competitive analysis and I go, okay, let me see how the year-to-date performance is down 31%. 1 year is down 15%. 3-year performance 41%. Then I got to ask myself, do I have better uses of my money? That make any sense? Because in a market that's been crushing it, right? Let me give you let's look at what we got up here. Let's look at Micron. All right. So the trend, never forget this, the trend is your what? It rhymes, friend. Right? So if I look at my trend, I want to know what my trend is. And obviously 59% year to date, 561 in a year, 650%. So if I know there are stocks like this out there, why would I buy a stock that's down 31% year to date, down 15% 1 year, and only up 46% in the last 3 years? Does that make any sense?
Yes, and this would be employee stock. So then the question would be, should I sell and get something else?
No, that's not the question you want to ask. Think like this. I have one of my members on, and they work for a company we all know. And they said to me, well, should I sell my stock? And the stock has doubled since then, by the way. And here's the other thing. When stock is left to your control, you will most likely mismanage the funds because you don't have enough information yet. Does that make any sense?
Yes.
So you need to always seek more information, if that makes sense. All right, so let's move on because I want to bring it to a close in a little bit. All right. So now, if I'm researching, I run my research report, but I want to go back. Let's go back to what are we going to go back to, guys? The feature tab, right? So let's go back to explore features. I'm going to go back to the research tab. Let's hit it. And then I don't want to buy the house, the best house in a bad neighborhood. So when I'm in the research report, I also can do what? Run the industry trends. So this way, if it's in the area, hold on a second. If it's in the area of semiconductors, and these are just examples, you can put any industry in here, right? And it'll pull up manufacturing, production, supply, demand, labor hiring, macro, micro, competitive landscape, capital structure, debt, regulatory policy, because that's important, technology and innovation, and geopolitical risk, right? How important do you think that is to your investment? Now, you probably don't know how important that is because you're probably newer in the game. But how important do you think that is to your investment?
Very important.
Right? So then to ask the question, how important is to have a tool like this where you can actually see inward instead of listening outward to all the noise? How important is that?
Very important.
This is where I always tell people you can rate stocks, you can research stocks, but now you want to find out how you find the stocks. Does that make any sense? Yeah, let's do that part. So I always said that momentum, trend, and fundamentals is how you find winning stocks in a moving market. Does anyone agree or disagree?
Agree.
Okay, so I have this thing called the Go Signal Engine. It's an elite feature, but when I go here, what it does, this is cute. What it does is it strains the entire market every day for momentum. Now I have a momentum engine, but this is special. It strains the whole market for momentum, right? And then it runs it through a 4-phase checklist. Yeah, I hide nothing, right? So what happens is it takes that universe and then it gives it a gate because I needed to have certain scores, right? Then I need to have the fundamentals there. If the fundamentals check out, then it goes to the consistency rating. If that checks out, then we get it here. So then I hit my little, I'm going to do this one. I'll just run a quick scan, see what happens. All right, so now I got my ratings, my ABCs. There's nothing that's going to be less than a C here because that's part of the rating, part of the gating, right? So I have and that's tied to the consistency rating, right? If that makes sense. So now, if I want to add any one of these stocks to my watch list, what I advise you, build your watch list, find them, build them, so you can start studying them. So if I want to add any of those, I can do that, right? So then, if they're, let's say, Fabrinet, whatever, 80% Go score, and this is the Go score. So what that is telling you is momentum, trend, and fundamentals, right? And then it's all scrubbed against the consistency rating. So the highest ratings are typically companies that are making moves. So then you go, let's go here on SITM, and it'll tell you. So let's go to the competitive analysis. You know what I want to look at? 42% year to date. 1 year's 288, 326, right? Let's do it again like the movie. All right. So let's go back to, was that in a Go score? Yeah, it was in a Go score. So now let's empower, right? Again, these are all combining a certain element here, right? And I'm only doing it to show you the momentum in the stocks, the Go score, right? So you have 62%, 180, 216. You get the point now? Yes or no? Tell me what the point is, because I see you, Mark. Come on, bring it in.
Sorry,
Mark,
but I see momentum. Not as high, not as much momentum as the last stock you looked at, but
because the rating was lower. Did you catch it?
Right.
Okay, so now I'm just going to do this real quick. Let me go to my this is where you can then what am I blocked? Okay, let me cut that out. Okay, so I'm going to just go to my agent section so I can just go down. All right. So here's the cool part about it. Is now this thing called the ruling class. So what it does is it takes the best of the best and it pulls it over. and it changes on a daily basis, right? So if I run a scan, the scan may take like 3 to 4 minutes. Why? Because it's pulling through 4 phases to make sure that it subtracts some people, it's going to kick some people out, it's going to keep some people, if that makes any sense in terms of companies, right? So now let's then go to how would you like to be able to go to sectors and find out what the best companies are on a level of the leaders and also the rising stars? Would that make sense?
Absolutely.
I paid him to say that. Anyway, so let's go. So let's go to the sector intelligence engine, right? And you can do that by going again through the features tab. But I just hit it because it's right in front of me, right? So let's just say that I am in technology, right? I can go through all the industries in technology: semiconductor, software, IT, communications, technology, electronic equipment. I want to look at energy. I can go through all the industries in industry, right? Energy. And then if I want to go to industrials, again, all the industries pop up. So let's just have our favorite one because we all like technology for some strange reason. And I want to do semiconductors. I just hit the analyze and let it do its thing, let it cook, let it marinate, right? And then what it does is it gives me the leaders that are dominating the industry, little blurb about that, and it gives me the rising stars that are dominating and coming up, right? And then I'm gonna wait till it pops up to tell you what the then is if you want to drum roll it. Here it comes. All right. So then what we got here is we have, you guys are in the way. Okay, so you have your sector leadership and analysis, right? It has your secondary leaders, right? And then it gives you your rising stars. And if you wasn't done yet, it gives you a list of all your leaders, and it gives you a list of all your rising stars. And then on top of that, it gives you, boom, the bull case, bear case, and it gives you the revenues, earnings growth, 71% margins, gives you all of this information. And then if you have a question on anything here, guess what you can do? What do you do when you have a question?
Ask Dojo.
You already know. Let's go to it, right? So then it pops up, push it in there, hit the tab, let it do its thing, ask as many questions as your heart desires, and have fun with it, right? And so you can find companies with that. You can then go, okay, wait a minute. Ah, man, what did we look at just now? SanDisk. SanDisk versus, what is it? NVIDIA, right? Nah. What did we just look at? What was the, Micron. Let's do NVIDIA. So, okay. So, which company, based on their Go score, sorry guys, I'm just not the typing person. Go score is a better buy. And typically they take between 18 to 30 seconds. If you're running a bigger report, it's going to take like 30 seconds to a minute, but that's okay. I'll wait for it. So then it goes, the superior buy over SanDisk based on Go score, 40 to 95, but SanDisk's higher Go score signals stronger multi-time frame momentum amid of storage demand, right? So NVIDIA is the superior buy, but you have more momentum where? Help me, I'm drowning. Right. So if you think about it from that standpoint, and then it gives you a ton of reasons, disadvantages, disadvantages. It doesn't allow, like, it's not going to give you pre-prompted explanations from, what is it, Perplexity and the rest of these guys. It's all curated based on the site, right? It's all curated based on the real data that you're pulling from the sources. And that's what makes it super powerful, because it gives you intel. And then you have your list. Now, guess what? I'm not going to go through any of the engines here because there's a ton of them that find stocks for specific reasons. So I'm going to close it up with a couple of things. I expect everybody to take part in the beta. Everybody. It's a 5-day trial. It's free. Take trial. What's going to happen is for the people that in the beta, I'm going to have a meeting on Wednesday, right? Just before the trial ends to find out more information from you guys on what you saw, what I need to learn from you, that type of thing. It's beta. For the people that subscribe to the site, I'm going to have a meeting with you guys on Tuesday, which is next week Tuesday, right? So then what happens, not this Tuesday, the next week Tuesday. And then what we're going to do is I'm going to go feature surfing. We're going to have some more fun and show you how the site benefits you on a 100%, and also for me to thank you for subscribing, that type of thing. But then I'm also going to have you guys in a group meet. So you don't have to join it now. I'm going to see your emails, and guess what I'm going to do? I'm going to send you, based on the emails from the user list that I know who are in the trial, I'm going to send you a group meet. And then that group meet is going to be for, in the trial itself, we're going to have we have 2 group meets. For everybody that's in the beta, the 5 days, everybody's going to be in that group meet. The special group meet, the private one, is for those who subscribe. You'll have access to me to ask me certain questions about the site and that type of thing. And I'm going to use this information to make the site better. Does that make sense? So I'm opening up for questions now. Anybody got any questions they want to ask? And just remember, your feedback is super gold. So I really appreciate it.
I got a question, Kevin.
Hey, Donna.
On when it was talking about sending out like weekly reports and daily stuff, is that for every level or is it just for the highest one?
No, that's a good question. No, every level.
Okay.
Yeah. What I did was I gave maximum value in every subscription, but here's the gift. For anyone that starts the trial, right, and continues on a subscription, I'm going to give them for 3 months the financial X-ray, and I'm going to put it inside their portfolio of what their features are, because it's a higher level. It's the highest level of the actual plan. And then for anyone that refers anyone, for those same people, right? If you refer anyone to the site and they join, then it extends yours for 3 months. It's going to happen for a year, right? So you can actually keep extending it. And then you can send me a personal email if you've been on the site for 3, whatever, and you've done X amount of whatever, and then I'll just extend it again. But that's the deal there. Now, a couple of things. You can either refer people, you'll get 10% off on your actual membership, right? For everyone that you refer. 10 people, 10% staggered. It's not going to happen in 1 month. It's going to happen over months, right? We expected that. If you want to be an affiliate, and let's say you're going to be a bullhorn for it because you just absolutely love it, you can't be both. You got to choose, right? You got to be a referrer or you got to be an affiliate. But the affiliate starts at 20% of whatever payment their people who signed up for is actually paying, right? And it pays out for a year, right? It gets to a certain level and it increases. It goes up to 30%. And I feel that based on what, you'll find a lot of value there. Like, I didn't go over a lot of things because, again, you don't want to have feature, like, what is all this stuff? You want to know the things that are most useful to you. Research report is useful, yes? Running an industry trend report for sector analysis is important, yeah? Knowing how to find companies is important. And knowing how to rate them is important. Those are the things you need to know right now. And I'm going to build a relationship with you guys because we're going to be in beta technically until I decide I'm not in beta anymore, right? So it'll probably be 3 months. It'll probably be 6 months. But guess what happens? We'll have meetings every now and then. I have a regular commitment to my group, but the reality behind it is that I want to build a relationship so we can continue to learn, and I can learn more from you guys to make the site a lot better than it is now. I went kind of crazy on it, but that's just my thought process. First of all, I just want to ask, what did you think?
It's great. It gives you a very comprehensive view of the stock you're researching.
Thank you, sir. Thank you.
And I like the fact that when you don't know something, you can ask instead of having to go to 10 other sites to try to figure out what something means or what's a trend or what's not. It's all right there in your hands that can work for you.
Good. So I'm going to open up the site. Anyone else want to give their feedback? I just want to say this first. I'm going to make the site available in about 5 minutes after we get off the call, right? And then you can do your betas. And then again, for everybody that jumps in, and does this trial, the free trial, I'll be meeting with you guys on Wednesday. But I'm going to send you guys a personal email. It's not going to be a text. It's going to be email because that's what you got to sign up for with anyway. So I'll know what it is, and then you'll have the join link for the actual group me for that as well. But for the most part, anybody else want to say anything?
I think the psychology part is awesome because that's what gets a lot of people when they're investing.
You know, thank you, Nicole. You know, it's so funny. I forgot to show you one more thing in terms of that. So let me show it to you really quickly. So you have a dashboard, right? All you got to do is hit your email or your name, and then and it goes into your dashboard. So your dashboard kind of gives you all these great things that you want to look at. But here's your IQ center, emotional IQ. And it tells you what your stress level is based on where your stocks are. The other thing I forgot to mention, so here's what happens. Your interaction with the site, whether you run a scan or you put your things in and you research, hit the research button, it documents everything you're doing, and then it gives you stocks based on your behavior to your email box. But it's freaky, scary a little bit, but it's actually a lot of fun for me to do this, right? Because it's the creative. This is the Marvel Comics. I did the Marvel Comics thing. This is that thinking that says, you know what? I'd like that. This is every good idea I've ever had started with, you know, it'd be really cool. And then I was like, yeah, I'd like to get 10 NVIDIAs sent to my mailbox. Let's go. If that makes any sense. All right. So
I have a question.
Go ahead.
Is there a way to set parameters in terms of price when you're looking at, in terms of the granular side of things with respect to, like let's say a price range in terms of where you want to enter the market?
Yeah. Let me show it to you.
Sure.
Yeah. Let's go. That's what the question section. If you want to keep me for 10 minutes, I'm fine. You can ask many questions. But here's what I wanted to do. Hold on, let me let this person in. Hopefully they're not bombing me today. I wanted to let you guys explore. Because, there's nothing like the pleasant surprise of, wow, this is cool, right? So let's just go to the Explore Features tab, right? And then let's go down to the basic. So then let's go to the trend reversal signal. And then I'm here, right? So this is pretty cool. So let's just say, give me a symbol, anyone. Give me a symbol. Let's go have some fun.
JBLU.
JBLU?
Mm-hmm.
Blue. God help us all. So then it gives us what the support and resistance is. Isn't that cool?
Mm-hmm.
Gives you your targets. If it breaks down, all this other good stuff. And then if you want to set, and it's your demand zone, supply zones, all this good stuff, pretty much support and resistance. But then if you then want to have fun and do, you know what, JBLU, and I go, what alerts would you like to set? Price, okay, right. SMA, EMA, momentum, patterns, chart, whatever it is you want to do. Then it gives you the list, morning star price, everything that I don't even freaking know is there. Okay, I'm just telling you. So then you can do that, and then once you set it, let's go inverted hammer. I don't know why. I mean, and it's there,
right?
And if you want a voice alert, you can do that. And by the way, all the alerts you can turn on or off. So if I go back to my dashboard, right? And I forgot to show you one more thing: dashboard, and then the update thing. So if I go to I'm sorry. This is the part where I give you too much, but I'm giving it to you for a reason. So all my notifications here, I can turn them off.
Right.
I don't have to be inundated with anything, but these are cool notifications. You get a daily newsletter, comes to you, email, come back and read it on the site. There's a lot of things there, but I'm not going to worry about that. So then the other thing is when you're in the My Agent section, there's an update. So here's the deal. You're going to get whether it be your daily market radar. If you get an early signal from the command center, don't worry about that. I'm not going over that right now. You get your daily cream report, So it gives you the pluses and minuses, and it gives you the what's happening in the market. You get a momentum scan, you get an RSI scan, and anything when those things come in, it goes right to your watch list. It comes right to your update. How do I get the my agent section? But getting back to, did I answer your first question though?
Well, what I was asking about is in terms of the parameters of the price, you're saying I can set it so that it sends me, let's say, stocks that are between, I don't know, $10 and $30.
Well, it won't send you. It has to be stocks that you actually are deliberate about, right?
Got it. Okay.
Yeah. Because you can then set prices here on your watch list as well.
Right.
But when you're doing your so how do I say this? This is not okay. Do you know which is more important to you? More important, price or value?
Value, of course.
Okay, so I didn't do anything when it came to price. I did it all when it came to value. Does that make sense?
Okay.
Because you have to understand you're chasing prices, how you lose money. How long you been following me on social?
A while. I don't know. I haven't been in the market as much as I should be. So, but I haven't.
That didn't answer my question. How long you been following me?
It must be at least 2 years, maybe more.
So you know I'm not a price guy, right?
Yes.
And you know when the video dropped down to $90 a share and everybody lost their mind, what was I talking about?
Buy more.
And what happened to everybody that purchased? I didn't say buy more. You know I didn't say that part. But you know what I mean. But that definitely was buying more, right? But the reality behind is that everyone that did, what happened? Are they up over 100%?
Yep.
That's the point. I don't do price. We do fundamentals around here.
Yep.
So when you understand that and you start getting into, this is where you get the confusion. I want you to have the confusion. I want you to know what they do first. And then if you know what they do, then it's more valuable to you. Does that make sense?
Yep.
So take it slow. Walk slow. Walk good. Listen, it took me a year and a half to put this together so you can have as much fun, but what you have is a companion now that says, I don't have to be alone in making a decision in the market, and I can almost take my degree of certainty up. Think about it. On a scale of 1 to 10, how good did you say you are at picking stocks?
Maybe a 7.
7 with JetBlue? Oh, you want to answer that again?
No, I will. I chose that on purpose to
okay, don't make me come after you.
I don't own JetBlue. I just chose it.
But this is what it is. I think that the offering for you guys, it took a second. Jimmy Bullard, what do you think, bro? I can't hear you. Talk to the screen.
I'm loving it. I'm just waiting to get my hands on it.
In about 10 minutes.
I know.
About 10 minutes.
You know me. That's what I'm.
Matter of fact, let me unlock it while you guys are on.
I got a little lucky and got to see some of it as you were kind of doing it. So I've been anxious for a while. You know that.
On the My Agent section in your toolbar, see that? Yeah. And you go down a little bit. And by the way, you see these little ebooks? The cheat code everyone should read or listen to, right? Because it gives you all the features. It goes over the features in it, except for the gold score. I wanted you guys to kind of figure that one on your own and have fun with it. But anyway, AskiDojo Markets, right? So if you ask the question, it'll give it to you. So let's see what we got here. What was the question?
Just, like if something happens on Monday where, just so you have a sense of why a stock just crashed, how connected.
It does. The answer is yes.
Yes.
What was Trump's latest tweet?
Oh, that's brilliant. That's actually really great for those who don't follow it.
No, listen, it's pretty cool. I had a lot of imagination going to this. Can you tell?
Yeah, for sure.
Yeah. And you guys, my team is on here and I appreciate them because these guys helped me build something remarkable. They don't even know it. What is it? April 18th. Trump's latest site post late Friday night into early Saturday, April 18th, from a rapid fire spree targeting Pope. Oh yeah. Yeah, it's nutty. It goes right. Yeah, pretty much. To answer your question, yes. Okay. And so I made sure of that. It's a 24/7 news scenario because the market exists that way. It doesn't just open up at 9 and close at 4 or 9:30, whatever. It closes at 4. The market is always the cycling of news geopolitically. Everything is circling, right? So that's important. And I wanted people to have access. So this is where it says ask about the markets, is where you come and you kind of, okay, the market's down. What's going on? Ask a specific question and you shall receive a specific answer. And guess what it's doing? It's giving you populated questions at the bottom, if that makes any sense. So now you have just a wealth of information, right? And you kind of go from there. The whole key during this trial period for you guys is to take your portfolios apart, reconstruct it here, put them in a watch list, experience it. Make sure you go to your dashboard and you turn on the notifications. So this way you can have all of the fruits of what it is. But see, this is pretty cool too. Let's say you're in asking iDojo a question, right? So let's go back to the sector analysis, because that's where you was. So we would go to the explore features, right? We go sector intelligence, right? So I want to go to my pro. So my sector intelligence engine, and I go down and I hit, it's going to be there, by the way, so you don't waste credits having to repopulate it. So those, whatever you last pulled, it'll still be there. So then you hit the Ask iDojo, and then let's just say, how does it compare to its peers? Why not? Have at it. Answer pop up, and that again, that time frame. But we can wait for good data. The data is the only thing that matters. I'd rather not have a sugar fix. So then it gives me the answer, blah, blah, blah. But then guess what happens when I hit the save button? It goes to my library. And where's that at? It's in my dashboard. So when I hit my dashboard again, then what happens, I go down and it says, how does it compare to its peers? All right. So when I hit the star again, it picks up right where I left off. Isn't that cool?
Yeah.
Yeah, we had a lot of fun making sure that, I mean, this is something to when I tell you, look at this. So this is Motley Fool seeking out for Bloomberg and Yahoo, right? So Motley Fool's is about $2,000 a month. But look at how many things you have as compared to none of them have it, right? And then as far as the memberships, the pro is going to get you, it's not, the financial x-ray is not in the pro. Anyone that joins is special. Anyone that joins the subscription is going to get the pro. Going to get financial x-ray put in their subscription for 90 days. And then anyone you refer increases it. So you turn into a referral engine for Ask iDojo. But guess what? You don't really need any incentives to tell people about something that's saving your entire life. You're going to talk about it anyway, right? But I'm giving you a gift. And so it's $59 to $249. This is going to have every single feature that everything has in it. It has a command center, which is super crazy for me because I like to know what's happening in the world, right? Not showing you that. You guys get a chance to have fun through the card, right? And these are the things that are really, you get a stock pick every day. And it's not to say you're going to win with the stock pick every day. What it says is I get an idea sent to me every day. I get to use Ask iDojo to see if it works for me. And some of these things are going to be rocking and rolling, and some things will be okay, right? But I get a chance to use the system to find me great companies. How does that sound?
Amazing. I got another question, Kevin.
Sure.
So if you start with one package, as you gain more confidence and knowledge and understanding, can you move up to other packages?
Absolutely. So then I'm glad that you asked that question. So let's say we're back on that scenario. Well, if you're young and let's say you're doing mostly trading, but you do want fundamentals there, this is basic. It's cool. But then if you want to know more about researching, you want to be here, right? And then once you start to understand the value of these engines, these my superpowers, right? My super duper powers. I'll explain that to the guys on Tuesday who join, right? And then once you understand and you get to a point where you are now like a James level where he got it, knows what he's doing in certain areas, at least the understanding of it, then you want to have access to all the tools, right? And then you ask yourself, you know, it's just like a setup, but it's a true fact. You know, for you guys that are been in coaching for 5 to 6 years, right? What has the information done for your accounts?
Giving me hope.
I'm talking about percentages.
About 175.
Yeah, but you've taken your account tremendously higher. Matter.
Yeah.
The same. 175.
Yeah. Oh, you
Yeah.
too,
160 for me.
Yeah, okay. So, and but you also have to understand something. And while you're like, well, that's over 5 to 6 years. Divided by 5 and 6, right? And if you think about what's that a year? That's 29% a year for those who've been here for 6 years. Does anyone think that's garbage? Anyone would want the 30% a year?
Yes.
All right. Well, you're getting it already. But here's the reality. I gave you my knowledge in there. The only thing you don't have with Ask Dojo, and I guess Jimmy will. What would you say, Jim? The benefit of having me versus having a machine?
You can help me off the ledge. It's there. You like when I want to jump. You reason that hand that grabs the shoulder and keeps me from falling off. It is what it is. Or when I want to make jump the wrong way, that's not necessarily off the ledge, but I get too ambitious.
Yeah, because what happens is when you're making money, you think you know, right? And you start to do these things, and I can take this and I can do that, and you get smacked around. And when you have money, you think that you know enough, right? The one thing I learned is humility, right? Because I'll teach you. I have this thing. I could teach you respect, or I could earn your respect. Which one do you want? Yeah, because if I teach you, I got a lot you don't want from me on that level, because I'm going to beat your crap out of you, right? But the reality behind it is it's important for you to understand, like, I'm the filter between money and emotions and how you're moving, right? I'm the filter there. That's super valuable because I can still give you all the winning stocks in the world, and guess what you're going to do? The same thing you was doing before you came. Does that make any sense? Because your behavior is what hasn't changed. Just your access to knowledge. So if you see the world on a 360-degree tilt, then you're going to see what it is. But if you go into the world with a 45-degree angle, no matter if it's 360 degree, the room you're in, you're still going to see it on 45 degrees. So you're still going to lose. You're going to make decisions based on emotions. I try to put it in there, but guess what? When you're emotional, how does the words move across the screen? You won't pay attention to all the tools. So that's why coaching makes sense. But now you understand why I was so picky in coaching, and I never put it out there because I don't care for you. I'm all right, guys. I don't need to sell you anything, right? I want to build things for my family. And I know that if I build you something that's great, you'll do all the talking to help me build something for my folks. And that's what's important, because it's going to build something for you. You'll never make decisions the same way. And you'll be able to run it against the machine, man against the machine, when you hear something silly from someone on social media and be like, they have no clue.